Welcome to the Daily Business and Finance Show. China's New Year spending skyrockets, Intel eyes massive incentives, and home dining gets cheaper. A look at the week ahead. EU prepares to fine Apple, lithium demand slows down, and weight loss drugs trim grocery bills. Plus, earnings reports from Nvidia to Walmart on the horizon. Credit card trends return to normalcy and Medtronic Q3 amid post-COVID medtech gains. Stay tuned after this short ad break for a deep dive into these headlines. During the Lunar New Year, China experienced a surge in consumer spending and travel, exceeding levels seen before the pandemic. There was a 34.3% increase in domestic trips and a 47.3% growth in tourism receipts. This upturn benefited various sectors including airlines, casinos, and retail corporations such as Alibaba and JD.com. However, despite this positive trend, there are ongoing concerns regarding the sustainability of consumer spending due to challenges faced by the real estate sector.
Reports suggest that Intel is currently negotiating with the Biden administration to secure over $10 billion in subsidies from the 2022 CHIPS and Science Act. This funding, aimed at semiconductor production, could potentially comprise both loans and direct grants. It's also anticipated that other firms in the semiconductor industry such as Taiwan Semiconductor, Micron, Texas Instruments, and Global Foundries will be recipients of these subsidies.
Inflation is on an upward trend, with the Consumer Price Index for January showing a 0.3% increase. This has had a significant impact on food prices. Despite this, KeyBank's research indicates a possible deflationary period for the food-at-home category by July 2024. This would mirror the events of 2016 to 2017 when prices in this category fell and consumer spending rose. Retailers like Walmart could stand to gain from such a scenario, as they have traditionally experienced sales growth during these periods.
The European Union is poised to impose a penalty on Apple amounting to €500 million, equivalent to $540 million. This fine is due to allegations that Apple prevented other companies' applications from alerting users about less expensive music streaming options available on its App Store. The probe into this matter was initiated in the year 2019 after Spotify lodged a formal grievance. According to the EU, the actions taken by Apple are in breach of competition regulations.
Albemarle, recognized as the globe's most substantial lithium producer, has reduced its global demand prediction for lithium by 1/10 for the year 2030. This is due to a less rapid shift towards electric vehicles in regions like the United States and Europe than initially expected. The firm cautions that the present low prices of lithium are not maintainable and must increase to encourage essential supply investments.
A Morgan Stanley survey reveals that 12.3% of households include a member who uses weight loss medications such as Ozempic and Wegovy from Novo Nordisk, or Mounjaro and Zepbound from Eli Lilly. Initially, these households experience an increase in grocery expenses. However, after starting the medication regimen, they observe a decrease in spending by 6 to 9%. This reduction is primarily due to decreased purchases of snacks, pastries, and ice cream.
In the upcoming week, the spotlight will be on earnings reports from a diverse range of sectors. From the tech industry, we'll hear from Nvidia and Palo Alto Networks. Retail powerhouses Walmart and Home Depot are also set to share their updates. In healthcare, Moderna and Teladoc Health will provide their latest figures. Turning our attention to medical devices, Medtronic is expected to release its report. Real estate firms Realty Income and Vici Properties are also on deck for updates. In the electric vehicle market, Lucid Group and Rivian Automotive will offer insights into their performance. The mining sector won't be left behind with Newmont and Pan American Silver Corp readying for updates. Energy sector news will come from Chesapeake Energy, Dominion Energy, Suncor Energy, EOG Resources, as well as Cheniere Energy. For entertainment enthusiasts, Warner Bros. Discovery is set to provide sector insights while Etsy and Wayfair are geared up for e-commerce trend updates. Lastly, but not leastly in financials, Main Street Capital along with Blue Owl Capital are anticipated to deliver their respective updates.
In January, there was a rise in credit card delinquency and net charge-off rates, exceeding the levels seen before the pandemic 4 years prior. The delinquency rate saw an increase from 3.1% in December to 3.24%. Concurrently, the average charge-off rate experienced a leap to 4.21%. Despite these increases, there was a minor dip in credit card lending, yet it still demonstrated an annual growth of 9.9%. Industry analysts indicate that due to macroeconomic conditions, issuers are becoming more stringent with credit and predict a deceleration in loan growth for the year 2024.
Medtronic, a manufacturer of medical devices, is scheduled to announce its third quarter results for the fiscal year 2024 this coming Tuesday. The company's future growth appears to be promising due to upcoming product launches and an unforeseen rise in medical procedures. Despite recent reductions in revenue forecasts, market analysts are predicting a 3% increase from the previous year, with earnings per share projected at $1.26. Historically, Medtronic has surpassed Wall Street's quarterly earnings predictions 88% of the time. And that's a wrap for today's episode of the Daily Business and Finance Show. Keep investing in knowledge until we meet again. Stay savvy, stay smart. I'm Montgomery Jones.
And I'm Amalia Dupre. Let's part ways for now, until tomorrow arrives. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.